Hi everyone, Lee Pacchia here, and you are watching The Business of Law, the only web TV show focusing on the challenges and opportunities facing the legal profession. My guest today is Ken Zimmermann. He is a consultant to law firms at the Zeughauser Group. We're happy to have him join us. Welcome. Good to see you again.
Hey Lee, good being here.
So we often talk about what law firms are doing wrong in today's difficult legal market. I want to trend a little bit positive today. You sent me this really fascinating list of 10 firms that are seeing substantial growth across 4 key financial metrics. Interesting results here. Where did this list come from?
The list is not what you'd expect. It was put together by another consultant named Lee Gibson, who is one of the smarter people who I know in the industry. And
she has a great Twitter account, by the way.
Yes, she does.
We
have her to thank.
Lee Gibson.
Yes, at AnnLeeGibson.com. Or no, it's at AnnLeeGibson on Twitter.
Right.
She put together a fabulous list. What's on it are a number of firms you might not expect to perform with a lot of strength over the past few years.
Yeah, there's some. We'll get to the heavy hitters first. I mean, there's some firms here that I kind of expected to be here, like Kirkland and Ellis, Gibson Dunn, Baker Hostetler. We've had conversations on and off air saying that they were having good years. They're really good years by this.
Phenomenal. So you've got Kirkland that's riding on a macroeconomic trend in the sense that they've made a lot of money over the years by becoming preeminent in private equity, high stakes litigation, as well as in bankruptcy when bankruptcy is hot, which it isn't right now. But then they've taken all of the fruits of their labor in those areas, and they've built a very formidable public company M&A practice. But what they've done is, in the current market, when so much of the money is coming from the private side, they've used their strength in private equity to get into many of the headline-grabbing deals that we've seen over the past 12 months, and that has everything to do with the strengths of their financial performance.
And one firm out there that has done well in the bankruptcy space at a time when bankruptcy has just been flat on its back is Baker and Hostetler. They saw almost a 70% uptick in gross firm revenue over the last 5 years.
They did. Steve Kessner, the chair of that firm, has done an exquisite job growing the strength of that firm. First of all, they grew out of Cleveland. Second of all, they've grown in some high-rate markets here in New York as well as in Washington, D.C. He's been very savvy about how he's done that. They, of course, have Irving Picard in the Madoff work that has been a huge engine of growth for them. But then they haven't just rested on their laurels when it's come to strength based on the Madoff work. They've parlayed that into other work that has a very long life cycle. They are a very strong firm and one to watch, and the numbers speak for themselves.
Another one I continuously keep hearing about is Gibson Dunn. They saw profits per equity partner jump up 57%. Not bad.
Oh my gosh. I mean, Gibson, preeminent in litigation. They have a very strong and increasingly strong corporate practice. Gibson, Kirkland, and Latham are 3 firms that are widely perceived to be entering the top elite tier of firms in this country. You know, I'll just very quickly tell you, Gibson, my partner, Ron Beard, is the former chair of Gibson Dunn. And during his time at the firm, he closed 8 underperforming offices in under 10 years. He said it was one of the most difficult things he's ever had to do.
I bet.
But they shrank in order to grow financially stronger. And that has something to do with the fact with where they are today in the market as one of the strongest firms. Exactly. And they've actually gone back in to a number of geographies that they got out of when they were weaker, and now they're much stronger for it. So it's a terrific firm. Ken Doran there, the chair of the firm, is widely admired in the industry for what he's doing at Gibson.
All right, so let's talk about something that really jumped out at me here. We have Pecinelli. Pecinelli is a great firm, not to disparage them in any way, but they're based in Missouri. How on earth did they grow gross firm revenue 186%?
The chair of the firm, Russ Welch, and his team are visionaries. They took that firm from what was once a very small Kansas City firm and are taking it national. They have done a series of combinations, and they have grown through combinations to get to where they are today. Just a couple of weeks ago, they announced that they have done a deal to grow substantially in Los Angeles. They also have done the same thing in Chicago, where they're in the 100 attorney range. They've grown substantially in Dallas, and they've been very smart about how they've grown. They've doubled down on a number of areas of strength. For example, they have built what is widely perceived as one of the leading healthcare practices in the US. And so their growth has been strategic because it's typically been targeted to extend their existing strengths and to become known as the best or among the best in the areas that they've chosen to focus on. It's a great story.
So when we look at a list like this, it's always tough to generalize, but is there anything that you see happening among this group of firms that they all tend to do in order to experience success in today's environment?
You know, there are some common threads. They address overcapacity and they don't have a tolerance for chronic underperformance. They also make choices about what they want to be known for in the market, whether it's Kirkland choosing private equity, high stakes litigation, and bankruptcy, whether it's Pecinelli choosing healthcare in a number of areas where Pecinelli excels. They also are smart about rates. They don't undercharge. They instead continue to raise their rates even in a tough market, and they don't lose opportunities to do that. And they also recognize that typically it's the firms that perform with the greatest financial strength that get the best talent. And the best talent begets the best clients and the best matters. And so they keep that in mind as they grow. They don't try to be all things to all people generally is another strength of these firms.
I wanted to talk a little bit about the methodology behind reports like this. Denton's announced last week that they were moving away from reporting profits per equity partner. Do you think we're going to see more firms follow along those lines?
You know, a number of firms over the years have said, listen, we're not going to report profits per equity partner. Ralph Baxter, when he was running Oric, made a splash when he said that some years ago, and some others have followed since. Our take is that of the metrics in this chart, revenue per lawyer is one that we look at quite closely. And it's not the only one we look at, but we look at it quite closely, partially because there's a perception that you could game the profit per equity partner number by changing the status of partners from equity partner to non-equity partner. And then when you change the numbers, you're able to, some would say, artificially boost your profits. Or if you don't change, they're artificially depressed. So profits per equity partner is one that everybody looks at. It's widely discussed. But revenue per lawyer, compensation to all partners, profit per partner are some of the stats that we look at closely. Value per lawyer is another one. So profits per equity partner are important. Revenue per lawyer more important, we would say, but really better to look at a number of metrics rather than just rely on one and only one.
Right on. We're approaching the halfway point of 2014. What are managing partners that you're talking to in your day-to-day saying about where things are going? Are things trending positive or negative overall?
It's a mixed bag out there is what I'd say. It's trending similar to last year. Many firms are performing with strength on the corporate front, so those that have corporate practices. Those firms are seeing what the macroeconomy is seeing, which is a lot of deal activity, a lot of private money getting pumped into investments that create legal work to do. The middle market is particularly hot for many firms. Also, certain sectors are stronger than others. Of course, firms that have energy transactional practices are very strong, so that includes the firms down in Texas, Vincent & Elkins, Andrews Kurth, Baker Botts. Kirkland recently went in there and did a very significant hire to start a corporate practice out of Houston. There are rumors other firms are looking at that market as well.
Okay, thanks so much for coming.
You bet.
Always a pleasure. If you'd like to see more of the stuff we're working on, be sure to go check us out on YouTube, and you can always follow us on Twitter. I'm Lee Pacchia. Thanks for watching, and see you next week.